Hey, welcome back to The Dive. Today on the show, we have the chairman of Nickel 28, Anthony Milewski. He's going to share his thoughts on China's COVID restrictions and their impact on commodities, where China imports their nickel from, uranium at the start of a 10-year bull cycle, when will capital start to flow into higher risk uranium explorers, his take on tokenized carbon credits, and he's also going to give us a company update on Nickel 28. Hey, Anthony, welcome to The Dive.
Hey, thanks for having me back.
Okay, so let's start with the topic of China. The country has been in headlines due to growing protests against COVID restrictions. How far could this potentially go, and what could it mean for commodities?
Yeah, I don't think anyone really knows. Every place, every culture, every people has a breaking point, and I think what we'll ultimately see is kind of opening up later this year, or excuse me, later next year, and easing some of these restrictions. That said, in the short term, it's negative. The more lockdowns that occur mean that people aren't consuming goods, smelters, refineries are shut. So I think it's actually it's a little bit negative in the short term. It's probably bullish in the midterm, however, because if you look at the U.S. and what happened when the U.S. reopened and Canada and Europe, there's a huge reopening trade, and consumers have all this pent up demand and went out and bought. So I think in the short term, like I said, it's probably pretty bearish, but in the midterm, it's probably bullish because you have commodities which they're kind of just moving sideways right now. And if you had a big new wave of demand come in, then you could see all these commodity prices move up. Now, the other thing important here too is just that inflation is not being factored into the price of commodities. And so I think you're going to see commodities go up just simply because of the cost of producing them. That's if you look at the price of sulfur and labor and all these inputs, depending on the commodity, I think what you're going to see is that just commodities in general need to cost 25% more to match just the new operating cost reality.
Now, according to the U.S. Geological Survey, China, being the world's largest maker and buyer of electric cars, has less than 2% of known nickel reserves. Where do you think their nickel will be coming from? And how big is China's role in the nickel market?
Yeah, so their nickel's coming from Indonesia. They're building huge scale in Indonesia. They also have mines elsewhere around the world, but they control the global nickel market, in my opinion. Of course, the Russians have a big project, but if you look at production, China really controls that market. That is going to become even more pronounced as the production in Indonesia comes online, and really nothing is being built in Canada of any particular scale or Africa at the moment. So I don't see that that's going to change. Australia also has interesting deposits, but with these multi-billion-dollar capexes, none of it's being built, and the Chinese are moving forward building in Indonesia. So it seems to me that that's where it's going to come from for them, and their kind of global control over that market's only going to increase with time.
Okay, now let's shift to uranium. You mentioned in a recent article that uranium is at the start of a 10-year bull market. Could you give us some color on this?
Yeah, so as we know, the green narrative has kind of transformed everything we talk about: ESG, transition to green energy. All these things require vast amounts of energy, and they require clean energy, and that's not going to come from coal. It's not going to come from hydro or solar. And so the only real way to make that transition is from a base load of nuclear energy, and that really wasn't something you would talk about 5 years ago. Politicians, environmentalists weren't prepared to have that discussion. And now you see the world's, main environmentalists, conservationists, all kind of agreeing and talking about the need for a baseload that's largely supplied by uranium. And so that's a big shift. It's always been true, but now that the narrative is kind of caught up with it, you're going to really see changes in that. And it's going to really provide for a unique moment for uranium over the next decade as we try to bring some of these new projects online globally and really just change the baseload away from coal.
What price level do you think that we need to see for money to start to flow into higher risk junior uranium explorers?
Well, it's already started to happen. A lot of these companies have already moved up 1, 2, 3 times. If it's a real bull market, of course, then they're going to go a lot higher. You can't fight the tape, though. The global market's a mess right now. You got the Fed and interest rate hikes. So I think a little bit you haven't seen an even larger move because of those broader macro market kind of trends. But as soon as I think that there's there's some direction in that market, you're going to see these junior stocks move quite a bit.
Okay, now let's move on and talk about carbon credits for a minute. There's news about tokenizing carbon credits and turning them into blockchain units. What are your thoughts on this?
Yeah, they've been doing that. I mean, I think it was really great for the market because what they did is they tokenized credits and they used the most inexpensive credits. So what they did was they kind of consumed a lot of the lowest value credits, which moved up the entire market. Ultimately, I don't think that's the solution, especially on top of everything that's going on just more broadly with the crypto market. I don't think the market is going that way. Instead, I think it's going towards, these Vera credits or the futures exchanges. But certainly, there's a place for that. And what we've seen is it's been very positive for the price of carbon credits as they've continued to consume credits and retire, the least value credits. It means that the price has just generally moved up.
Shifting to nickel 28, you recently published your third quarter production operational results. Could you walk us through these results and what's the strategy moving forward?
So we're the largest producer of MHP in the world. There was a slowdown in sales. It's reflected in the quarterly. That really just reflects lockdowns globally, not specifically in any specific location. I think we've started to sell through that inventory. And, we've had a little bit of a backlog, and I think we're working through that now. Looking forward, the company is going to trade in large part in line with the price of nickel because that's where the free cash flow comes from. And so, I think over the next 18 to 24 months, you're going to really see the nickel market come back on fire as China reopens, as EV sales get back on track. And so I think that you're going to have a really interesting moment for nickel over the next few years.
We saw that you stated in one of your articles that nickel needs to start small to go big. Does this method apply to nickel 28?
Nickel 28 is really focused on paying down its debt and distributing free cash flow. And, we've got at least another year of probably a little more than a year of paying down the debt for the cost of building that multi-billion-dollar mine. And, once we get through that and we get there, I think that's the big moment when we start really distributing, huge amounts of cash back to the shareholders.
Okay, so Anthony, last question. What are the key timelines or catalysts investors should be looking out for with nickel 28 as we head into 2023?
I think it's all about paying down the debt. So, I think as an investor, you watch that as we get closer to repayment of the debt, paying down that debt. I think the share price moves accordingly. So that's really the catalyst to watch for this year.
Okay, great. Well, thank you so much for coming on today and filling us in on your story.
Thanks a lot. Have a great day.
Thanks so much for tuning in today. We'll be back again tomorrow with the latest in small cap news coverage. But in the meantime, be sure to hit that notification bell and subscribe below so you don't miss any of our future content. Goodbye.